Welcome back, learners, to this business data analytic paper. This paper was done in last sitting, that is August exam. And today we want to look at the practical part of this paper, that is section 2. This section 2 paper carries 60 marks. Remember, we have section 1, which is a theory paper, and we have part 2 of this paper, that is section 2, which carries 60 marks. So we start with the question number 21, which was tested last sitting. And this question is saying, ZD Limited has just completed its strategic plan for the next 5 years, commencing on 1st January 2023. The company is optimistic about the future performance, and could like to prepare the forecast financial statement for the year 2023 to 2027. The actual financial statement for the year ended that 1st December 2022 with the projected growth rate are provided as follows. So we have the statement of profit and loss for the year ended that 1st December 2022. They have given us the revenue, cost of sales, all the way to the retained profit. There is an annual growth rate in 10% for revenue and cost of sales. We have 5% for administration expense, and we have 10% for the distribution cost. We have also the balance sheet and their growth rate they have given us here also. We have all the assets. And then look at number 2, additional information. We have been told, number 1, finance cost is 5% of the previous period bank loans. So we have to change the finance cost there. And then number 2, tax will be average of 25% of the profit before tax. That is the tax rate. And the company will maintain the same dividend payout ratio. And then number 4, say, apart from the beginning year of 2025, when the company will raise more equity comprising the shares of 500,000 and 100,000 shares per annum, the balancing figure in the financial statement is the bank loan. Required, number 1, or A, the forecast financial statement for each of the year from 2023 to 2027. So they need the forecast of this financial statement, that is the income statement and balance sheet. So let's jump into the solution. So we will open a new worksheet here. So this new worksheet, remember, is a business data analytic paper. It is a practical paper. So what you do, we have to color this sheet so that we don't see these borders. So I will click here. Go to home. Right from there, look for the fill. We put the colorless or the white, so it will color this one, everything. And then here we can write now as steady limited, and then you write here financial forecast for the year. So for the year, because we have so many years, what you do, you leave it. You can make this one bold. So select this and click Control B, bold. And then here we can copy so let's start with forecasting the income statement. So what we do, we just copy the same item from the income statement because we are forecasting from 2023 going forward. So we have to use our current data to do the forecast. So we will copy the same data here, come here, copy this data, out there, sheet 1, that's the one we are using. Control V to paste that one. So we have our data here. So this one is the base year, We don't need these borders. Go to home, select borders, put no. Now we are forecasting for 2023 from 2023 going forward. So you don't need to write 2024, 2025 as an Excel. This one is an Excel. So you must have learned the advanced Excel first. So what we do, I just insert equal sign equals this one plus one, so that I get 2024. This one plus one, I get 2024. I get 2024, and then I drag until I get 2027. Yes, so we only need this 2027. So that is it. So let's do the small formatting. Let's do the small formatting. We don't need borders. I'm seeing still have borders here. So let's do some formatting. So here we pulled this, and and here we will have assumption. So assumption, we go back to our statements. Assumption, we go back to our statement. So if you look at the statement here, they said annual growth rate. So the sales and cost, so we have the sales, the revenue and cost of sales. The revenue and cost of sales here, we have assumption here. Revenue and cost of sales will be increasing at 10% each. 10% each. It will be at 10% each. 10% each. Then what else? Remember, I'm just drawing my assumption here. What else? We have the distribution cost. Also, we will increase by 5% and 10%. So this one is a forecast for income statement. So that is the first assumption. Our first assumption. These are our first assumption. So we go to additional information where we have been told the finance cost is 5% of the previous bank loan. So finance cost, remember, we do account for the interest. In the income statement. So if you go back here, you can see our finance cost here. We have -50 in finance cost, and we have been told finance cost. The finance cost is 5% of the previous bank loans. Yes,